morning. Ah, coffee and a donut. I love that. Morning, Rob. Morning, Ron. Good to see ya. Whoo! What is today? Today is the 12th of November. Good morning, Andy. Good to see you. A lot of talking going on today in the news. Hey, Nanda. Nice to see ya. Guys, every morning I'm heading over to Forex Factory. Morning, Steve Diego. Great to have you in the room today. And I'm just looking for news. I'm looking for high impact. Hey, Jonathan. Looking for medium impact. And really, there's not a whole lot going on today. There's a lot of low impact. At 10 a.m., FOMC member Waller speaks. Apparently, Waller is a little more important to the rest of them. And that is a medium impact. So around 10 a.m., I'm going to put my guard up. Well, I'll be teaching. You guys may put your guard up and say, you know what? Whatever Waller says may make the market jump or bump a little bit. Good morning, Izzy. Those medium impact releases can make things go sideways every now and then, guys. It can kind of pull you out of your groove. Morning, Erla. Hey, big dog. So anytime I see high impact, medium impact, and I'm going to just do a little visual here, guys. Couldn't care less about what it is or why it is or who's talking or what they're doing. I just look for these orange and red boxes, and anytime I see one, I choose to not trade, to stay out of the way about 5 minutes before, and then if it does create a spike, I wait for the market to settle back down. So I do that every morning, guys. That's a big part of my day, is going to Forex Factory. I typically do that as my charts are loading, as I'm reviewing my charts. That's just part of the process. Everything that I'm going to talk about this morning is going to come straight from the Nexgen page, specifically the trading guide from the education page. And my focus for the first hour, every hour, guys, every day, is what we call a high probability trade. And there it is right there. The high probability trade, guys. This is defined when each indicator on every chart agrees for the rules for the trade. I think one of the misconceptions I had when I began with the software was that I was under the impression that I was going to be a day trader, that my goal was to just get in and hope it does what I want it to do. And the reality is, guys, is the market has a memory, and the market moves in patterns, and it moves in the same patterns every day. And a high probability trend trade, the way that we teach it each morning, guys, everything is right for the pattern. Everything agrees with the rules. Every advantage is in place. And when those advantages are in place, guys, this high probability trend trade that I teach every morning, this is a trade that typically wins 70 to 80% of the time. This is a trade that, because of that win percentage, creates confidence through that memory of success. But most importantly, and the one thing that I think is the best of the best, if you take the time to learn this trade first, is it teaches you to read your charts. 90% of your day is reading charts. 90% of your day is not doing a darn thing. 90% of the day is sitting on your hands. 90% of the day is playing solitaire. 90% of the day is scratching the dog behind the ear, guys. And this chart reading that you're learning to do, it's going to keep you out of unnecessary losses 90% of the day. But when the rules come to be and everything is right, 10% of the day will be taking trades. Em, I saw you typing in there. Don't be shy. Welcome to the room. There it is. Guys, learning to read your charts is the greatest skill that you can pick up, because you're going to understand where the market is likely to continue. You're going to be able to identify where the market is likely to go, and you're going to understand where the market is likely to stop. And it seems like it's not enough in the beginning. It feels like there aren't enough rules to be a successful trader. Guys, I'm only teaching you 3 rules this morning. Each rule, when it is met, when it is true, provides an advantage. The first rule, strong trigger lines, will make sure that you have the advantage of momentum. And the advantage of momentum, well, it can push a market in the direction of the trend. It's difficult to stop a market with momentum. And this is the first thing that we look for every time we look for a trade. And I don't care what kind of trade you're looking for. Momentum is really the basis. It's the core. Good morning, Miss Adriana. The second rule, not trading in determination conditions, making sure that there's none of those likely to stop areas. This is going to make sure that you have room to your profit targets, that there's enough room for you to actually make some money in your trade. We're going to call that a clear path. This is your second advantage. The first two rules, those first two advantages, are enough. They're enough to build a trading plan. They're enough to build a consistent trading plan. They're enough to find more winners than losers. Once you understand momentum and clear path, that's what opens the doors for the rest of the trades. That's what sets you up to find success outside of the highest probability trend trade. The third rule is specific to the high probability trend trade. This is where you're going to pinpoint precisely where the market is most likely to continue. This entry, using rule number 3, the entry area is going to help you reduce your risk, help you maximize profit potential. So we're going to take an entire hour, who knows, maybe an hour and 20 minutes. I don't know. I'm trying to talk slow today. And we're going to focus heavily on momentum, clear path, and entry. And we're going to do it on only 2 charts. That's it. Just 2 charts. Large chart leads the way. I'm going to put my marker over the bar that we're using on the large chart. The most current bar will define the direction of the market and let you know which way you should be looking for your rules to be met. The most current bar will define the momentum in the market, whether or not you have a market where the odds are favorable to push in the direction of the trend. And the most current bar is going to define the areas, whether or not they're problematic, if they've become one of those likely to stop areas. Your first 2 rules, 66% of your advantages that get you into a trade, happen on the large chart. The large chart is a very slow moving chart. It's a broad stroke of a brush. It shows the overall opinion of the market. And it is difficult to see change on the large chart. It just doesn't happen quickly. Once your rules are in place, once they're true, once you have momentum, once the path is clear, you're going to turn your attention to the smaller chart. This is the faster chart. This is your entry chart, guys, and this will also be a chart that helps you manage later down the road. But the small chart takes an X-ray of this one bar. And inside this one bar, there's typically 20 to 30 bars on a smaller, faster chart. You're going to use that refinement process to refine the broad stroke of a brush. You're going to see these inner workings. You're going to see pushes and retracements and fluctuations. And you will be able to pinpoint right where the market is most likely to continue. That's what rule number 3 is going to do for you on this smaller, faster chart. It will allow you to reduce risk dramatically, guys. It's going to let you increase your profit potential. One of the things that I like to tell new users is let the large chart lead the way. Let the large chart dictate your decision making, whether or not you look for an entry, and don't go looking at that small chart until momentum and clear path are in your favor, because the small chart is very much this siren song, and it will lure you into trades that aren't supported with advantages. So reading left to right, go from large to small, and we do this because it really does let you know who you're trading with or who you're trading against, guys. The large chart is the large crowd. And this is the overall opinion of the market. If these people want it to go up fast, it's going to go up fast. And if they want it to go down fast, it's going to go down fast. So it's easier to just trade with a large crowd. The large crowd defines the direction. They define the momentum. They react at those key areas. And then there's the small crowd. And the small crowd, believe it or not, they actually have way more influence than you'll ever have. Probably way more money than you have in the bank. And have the ability to create fluctuations, these little pullbacks, these shoves against everything that the large crowd wants. Guys, the small crowd fails typically 70 to 80% of the time. Rule number 3 is designed to allow you to pinpoint where their failure is most imminent, and this becomes your entry for the highest probability trend trade. And if they're failing 70 to 80% of the time, guys, you have the potential to win 70 to 80% of the time. So I'm going to encourage you to keep it very simple this morning. Even if you've been with me for 20 years, who cares? Let's keep it simple this morning, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. And it says okay to trade because you have to have the rules in place to have the advantages. So if the advantages are present, it's okay to trade. If the advantages aren't present, you have to say to yourself, it's not okay to trade yet. I need to be patient. You guys can simulate. One of the great things about if you're on demo or you're not ready to go live yet, Simulator allows you to practice. It allows you to make mistakes. It allows you to do things great and to do things horribly. And neither is a negative because this is a learning process, and it's important that you go through both sides of everything in the learning process. I think it's equally as important to understand what doesn't work as it is to understand what does work. So simulate, practice. But the key to getting the most out of your simulation, guys, is post your trades in class. Don't hide trades from me. Don't show me a winning trade and you're down $1,000 in your P&L. Show me everything. Losers are where the best lessons come from. I'm going to tell you right now, my losers are where the greatest lessons come from. I don't like losers. I'm competitive. But they're a normal part of a positive equity curve. And losers are going to happen every day. You've got to be good with that. But the key is to take the correct losers and not the avoidable losses without those advantages. So post in the room. This is the first step in getting to where you want to be. I'm going to give you feedback on everything. Your job is to learn the patterns, and my job is to let you know if you're learning those patterns correctly. So let me give you feedback on everything that you see. We're going to simplify. We're going to talk about the highest probability trend trade, and then that's going to open doors for other trades. I'm going to introduce you to what we call a medium probability trend trade based on your study from the high probability. You have to know what you're going to look for, guys. What's it look like to have a high probability trend trade? What's it mean to have momentum? How does a clear path, how is that identified as opposed to a termination condition, guys? You've got to learn these looks so they become easy. And the better you get with the looks, the slower the market seems to move. It's a pretty cool phenomenon. And that's where the second half of getting to where you want to be ASAP comes in, is using the spreadsheet. When you downloaded your software the first time, you got this spreadsheet in your Nexgen Study Picks folder. I put it in the room every day because every day I try to steal at least one thing from the classroom and put it in there to make it a better study tool. But there's 5 tabs. Only 4 of them are functional. The first one is your trade tracking sheet. Every time you take a trade, win, lose, or draw, drop it into this spreadsheet, guys. Post the picture, talk about your advantages, whether you won or lost. But most importantly, take the feedback from class and get it into that notes section. Maybe you broke rule 1. Maybe you broke rule 2. Maybe you jumped out too soon. Maybe you jumped in too early. Guys, I'm going to give you that feedback on everything that you present in the room. And I'm not just going to give you feedback and go, hey, guess what? Andy, you really screwed this one up. And then move on to the next one. I'm going to say, Andy, I want you to see how you did this. Now let's look at this advantage, this entry. This is where it could have been a little less risky, where your profit potential could have gone up, or maybe exits. And what we do is every picture posted is like a private session. And the whole goal of the private session is to be a little bit better going into that next trade. So don't do what I did when I started, guys. When I'd take a loser, I'd be like, F that picture. I'm not taking that picture. I don't want to remember this loser. Man, what a kick in the clackers, you know? And I would start skipping losers, and I wouldn't post losers in the room. And guys, the losers are where I needed the help. So post these into your spreadsheet. There's how to paste them. There's even a whole section on how to annotate your charts, or at least a picture there. But every morning, come back to these trades. What worked, right? What's bringing me success? What's making me feel good? What keeps me calm? What makes me feel easy and relaxed? Guys, that's what you want to repeat each and every day, the stuff that works. But you also have to ask yourself what didn't work. And guys, there's going to be stuff that doesn't work. It's okay. But it's typically going to make you feel nervous, and it's going to feel forced. When you break your rules, you're going to feel it in your gut. And when you break your rules, you're going to move stops, and you're going to adjust targets, and you're going to completely abandon advantages, and you're going to rely on hope, guys. And I'm going to tell you, in the wisdom of my father-in-law, poop in one hand, wish in the other, tell me which one fills up first. Guys, we have such an advantage with what we do that we don't have to hope. We're better than that. So go back and study what's bringing it, what isn't. And the cool thing is that when you guys post in the room, it takes me maybe 5 pictures of your trades, maybe 5 pictures of your trades for me to figure out what your thing is. Some of you are going to trade into termination conditions. Most of us do in the beginning. We're going to come up with a plan for you to learn to avoid that. Some of you, and I still see it daily, keep astronomical risk on your trades. You keep huge dollar amounts when it's so unnecessary. Guys, if I see this as one of your patterns, we're going to work on management. Every picture that you post in this room will be a focus on management to help you stop giving so much back. Because a lot of us, and I say us because I've been where you are, a lot of us learn to take the perfect trades quickly. It's not difficult to recognize these patterns with a little bit of study, but it's the management that sets apart the winners from the losers a lot of the time. Because when you trust your advantages, momentum, and a clear path, you don't want to get out of the trade. But it takes a while to trust. And when you understand where the market is most likely to continue, you know where it shouldn't go. And these are the key concepts that are going to allow you to have the least amount of risk and the highest profitability. So we're going to work on that. The next tab is the 101 section. These are the rules in green, exactly what it looks like to have them met. And then, like I said earlier, I think it's important to know when your advantages are gone. So the rules 1 and 2 not being met are in red. There's a section called client trades. I've put a lot of work into this one for you guys. There's about 400 pictures here of Nexgen users using the software, taking great entries, hitting home runs, hitting base hits, just really being rock solid traders, embracing advantages. Go back and study these. This is a great tool to learn the looks so that they become easy. There's the entry sequence for both long and short high probability trend trades. Guys, give me a Y if you can hear me, please. Anytime someone posts in the room that they can't hear me, I like to make sure. Are we good? We do have sound? Okay. So Josh knows, guys, if you ever can't hear me, tell me, and I'll ask, and you'll see all these Y's come in, and that's your cue to reboot the room, because it is very much you, not me. Guys, there's a very mechanical, basic management plan, and I'm going to give this to you in a written form as well. One of the things that new users can do is keep it super focused and mechanical in the beginning. Everything is a series of if-then as you learn to read your indicators, and then there will be reasons to hold longer, to exit sooner, that you'll come up with over time. And then the best thing about chart reading and learning to read your indicators is you're going to start to recognize patterns outside of that highest probability trend trade. You won't even know that you're looking for them. And you'll be like, oh my gosh, this just happened 38 times, and 38 times it stopped out my trade. I need to work that into my management. So take a lot of pictures of those patterns that you recognize, and then fill your own section in. Your personal trade setups, your management things, your patterns. And you had to reboot the computer. That happens sometimes, and I don't know what it is with Discord. Every now and then it goes a little sideways. And a reboot typically fixes it. So guys, the spreadsheet was dropped in the class. This is our first hour every day. I love the repetition. People ask me on the side, they're like, how can you say the same thing every day? Guys, the reality is that when you hear the same thing every day, whether you're on day 1 or 1,000, it's that repetition that creates recognition. When you see the same thing every day, when you associate a visual with the words that support it, guys, every day it begins to click. And what was once difficult becomes easy. And what felt overwhelming suddenly feels very underwhelming. And you're almost bored waiting for advantages. So we're going to learn the rules. You guys, I want you to simulate. I want you to practice. I want you to take trades. I want you to show me those trades. And most importantly, when you show me your trades, guys, I want you to address those three advantages. I want you to, on your chart, write them, because remember, you're going to come back and study these. I want you to talk about the momentum, the clear path, and the entry. And even if they're missing, if you don't have the momentum, I want you to tell me, hey, these aren't the strongest triggers. This isn't the clear path. This is only the potential to break. My entry was early. My entry was late. Because what you're doing is you are displaying an understanding of the concepts that bring success. And if you write on your chart, hey, I had strong triggers, but the reality is they were kind of weak, well, then that means that we get to go back to the rules and address what it means to have strong triggers and address what it means to have a clear path, guys. So it's your annotation that opens the door for lessons. And these lessons, the more you guys post, the more you ask, guys, the better this classroom becomes. I hate it when this class is a lecture. And I don't use hate very often. I want it to be a discussion, and I want you to feel comfortable having the discussion. It's okay to be wrong. Guys, I'm wrong every day. Been married 27 years. I've been wrong every day for 27 years, but I keep getting a little bit smarter, so she lets me hang around. So let's get into rules, guys. Large chart leads the way. Big chart has to say go. Large chart starts with strong trigger lines, and strong trigger lines are pretty easy. When I open up the large chart, the first thing I'm going to notice is the background color. It's either red or green. Green is up, red is down. How simple is that? It tells me exactly which direction I should be looking for rules to be met. In order to have strong triggers in an uptrend with that green background, both my small triggers and my large triggers must be green. If the colors don't match, I don't have momentum. Guys, how easy is that? If the colors don't match, I don't have momentum. So momentum in an uptrend, let's take some pictures and doodle today, means that my small triggers are above my large triggers, that both are wide and they're angled in the direction of the trend. And then my favorite little doodle to make, we'll use something that's pretty visible. Guys, I want you to picture scissors that are open. And when scissors are open, you can cut. When scissors are open, you can get work done. Ron, the answer is yes. When scissors are open, guys, I have strong triggers. And strong triggers means that the odds are favorable for the market to continue up. So odds favorable momentum is that first advantage. You're going to see it on charts OFM. In a downtrend, background is red. Small triggers are red. Large triggers are red. So check it out. That's not red. That's not momentum yet. And then it's those open scissors, guys. It is that opening, that space, that gap that allows me to understand that the odds are favorable for the market to continue down. That odds favorable momentum, guys. This is the best of the best. This is rule number one, guys. Momentum is universal. Whether it is your large chart, your small chart, a range chart, a month chart, it doesn't matter. It can be a stock chart. It can be a futures, a crypto chart. Momentum will always be momentum. This is rule number one, and it happens on the large chart. And I want you to see something. My small triggers work their way back inside of the large triggers. My scissors closed. Ladies and gentlemen, I can't get work done if my scissors are closed. This is what we call weak triggers. And weak triggers let me know that anything can happen up or down. So I love words, guys. I really do. I'm a huge fan of language because language paints a picture for me. When I have separation, the odds are favorable for the market to continue down. When I have separation, the odds are favorable for the market to continue down, to continue up. When my small triggers return to the large, that's weakness. Anything can happen. A lot of times I see bounces, reversals at key areas. When I have weakness, I see bigger retracements. And guys, if you scroll back a little bit, you'll see this happening all day long. Strong triggers up, strong triggers down. And one of the great things about strength is it pushes the market in the direction of the trend. One of the great things about strong triggers is these strong triggers can break those key Fibonacci areas on your large chart. And one of the best things about strong triggers is, guys, it covers up a lot of the mistakes that new users make. Strong triggers, just, man, they push. What a great advantage. This is the one where I see people in the room creating paths, and that momentum is the core of their trading plan. There's a reason for that. Once I have momentum, termination conditions must be false. I can't trade into an area that has the potential to stop the market. I can't trade into an area that may create a reversal or an untradeable bounce. I need to have room to my profit targets. So when there's no termination conditions, when I have none of those likely to stop areas, we're going to call it a clear path, guys. The termination condition, it's nothing more than a horizontal line on your large chart. Each of these lines are equal. Each of these lines carries the same weight. Each of these lines has the same potential to stop, to reverse, to create a fight. You don't have to know how they're created. Hell, you don't even have to know their names, to be honest with you. You just have to know that anytime we reach a horizontal line, decisions are being made by the large crowd. Anytime I reach a horizontal line, that large crowd may buy more, may sell more, may fight for an hour. I never know. We're going to look for divergence highs and divergence lows. These are the magenta and the cyan lines that print off of a pivot when there's a loss of momentum. Anytime you see this magenta line, I want you to know that the sellers stole the momentum from the buyers, and they created a line in the sand where they dare the buyers to try it again. And anytime you see this cyan line at the bottom, know that the buyers stole the momentum from the sellers, and then they drew this line in the sand, and they're daring the sellers to come back and try again. We're going to look for Fibonacci resistance. We're going to look for Fibonacci support, the red and blue lines that may stop the market, may create a bounce, may reverse it completely. And you're also going to look for these yellow 1-to-1s. And yellow 1-to-1s, if the market's in an uptrend, they may behave as resistance. And if it's in a downtrend, it may behave as support. So areas are where decisions are made. Write that down on a piece of paper. Take a Sharpie, scribble it onto the back of the dog, whatever you have to do to remember that. Decisions are made at key areas. So in order to identify a key area as a termination condition, the first thing that has to happen is price must reach that area. Those dynamic Renko bars have to make it to the decision point, guys. Whether it's resistance, price bars reach it. Whether it's support, price bars reach it. Guys, I've never gone through the drive-thru and tried to order my cheeseburger 4 cars back. I always get to the point where decisions are made. So if price reaches resistance, all you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, resistance is a termination condition. Resistance may stop the market. Resistance may create an untradeable bounce, a deep retracement that pulls you out of a position. Guys, resistance may reverse the market completely. If resistance reverses the market completely, we're going to call it a strong top. Price pushes down off that strong top. The momentum carries it. Maybe you're in a short trade, maybe you're not. Maybe you're looking for a reason to exit. Maybe you're hoping for an opportunity to enter. But if price reaches Fibonacci support, yellow 1-to-1s, divergence low, you just have to ask yourself, where are my triggers? If my triggers remain above support, support is a termination condition. Support may create an untradeable bounce. Support may stop the market. Support may reverse it completely. If support reverses it completely, we're going to call it a strong bottom. Guys, a strong bottom and a strong top are not mandatory for the high probability trend trade. It doesn't work its way into the rules. But if a high probability trend trade sets up after a strong top or bottom, the likelihood of success goes up a little bit. So it's important to understand that. And that concept is going to carry you to almost every other trade beyond the high probability trend trade. So I've talked about when these cause trouble, when they're problematic, when they take away your advantage, guys. When price reaches an area, let's see what we have going on the S&P. Hey, good morning, Cav. Here's a great example. Price reaches support and the divergence low, and look at the bounce. And price gets to resistance and resistance. and support and resistance and oh my gosh, all over the place. These lines stop the market. These lines take away your advantage. These key areas create big, ugly, untradeable bounces. So we want to avoid them. But the areas also break, guys, and they typically break without odds favorable momentum. An area is not considered broken until both the small and the large triggers get to the other side of the line. It's the easiest way to say it. Once the small and the large triggers get to the other side of the line, your path is clear. You have absolutely nothing in the way until you reach the next area. So price reaches support, trigger lines are above, sit on your hands, and sit on your hands for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars worth of data, and now the path is clear. And now the momentum is there. And guys, support behaves as resistance. Anytime you see one of these tails on a large chart and the rules are met, that's probably the pullback on the smaller, faster chart, giving you an opportunity to capitalize on that momentum and clear path. And then those weak triggers and the market pushes up and it hits resistance right here. It doesn't break until all the way over here where the large triggers goes, guys. 90% of your day is doing nothing, but once that path clears, once those small and large triggers are above resistance, resistance behaves as support. Your path will remain clear until you reach the next area. And guys, once again, areas break all day long. Weak triggers at a fib, huge retracement. Eventually the small and large get above and the market pushes up, right? Eventually the small and the large get above resistance. You can see that it behaves as support. You can see that this resistance is behaving as support. The easiest trades are trading away from areas rather than trading directly into areas. Price just reached yellow 1-to-1s and a divergence high. And guys, look at what the market's doing right now as we speak. Right off that termination condition. They ran out of steam, they hit an area, and there's that big untradeable bounce that you knew not to trade into that area. Can you guys give me a why in the room? Price reaches, no triggers, no trade, small and large through, man, go cat go. We got some good stuff going on. Awesome. Once you're good at that, once you accept those terms, it opens the door for your second trade. This is what we call a 50-50 trade. 50-50 has nothing to do with your chances of survival. 50-50 means that 50% of your trigger lines have absolutely smashed through the area with that odds favorable momentum. 50% of your triggers have not. That's it, 50-50. Pretty easy, right? You could call this a straddle trade. You could call this an up-down trade. I don't care what you call it. Just understand that this look right here means that the area only has the potential to break. And any entries that you take with nothing but potential cannot be high probability trend trades. Rule number 2 is not met. The path is not clear until the triggers get below. I'm going to give you a plan to take this trade. I'm going to give you the ideal entry and even a plan to manage it. But I'm going to tell you right now, if you don't understand the difference between termination and clear path, you're going to get caught thinking this is something it isn't. So let's focus on the first trade first and understand that there's going to be times when your path isn't clear, guys. The areas are stacked one after the other, 4 or 5 points apart, and you're like, son of a gun, I can't seem to get a trade. I can't find an entry. They won't give me a clear path. I'm just going to have to trade into it and hope something works out. Guys, this is 90% of your day. 90% of your day is doing nothing. It's ridiculous how good you'll get at doing nothing. But just a little pat on the shoulder, a little there. The futures markets trade trillions of dollars a day, guys. Trillions. On average, $220 billion an hour are exchanged in the futures markets. It only takes 400 US to hit a 6-figure income. So out of $220 billion, you have to find 400 in there with a couple key advantages to put you at 6 figures. And guys, I'm going to tell you, if you study, if you focus, if you keep it simple, you're going to find that that's pretty effortless. The more you try to fabricate, the more difficult it'll be to find those profits because you're going to have to offset your losers. Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. Rule number 2 is going to keep you out of consolidation. It's going to keep you out of chop. And 90% of your day is keeping out, guys. 10% of your day is trading. And I can say with absolutely no uncertainty, with no hesitation, with no reservation, that the difference between the most successful traders that I've ever worked with and the ones that continually struggle is the ability to do nothing when there's nothing to do. And guys, it will be the hardest thing that you ever learn. Entries aren't difficult. Management becomes pretty effortless. Doing absolutely nothing when your advantages aren't present, that's difficult. That's where you're going to have to focus your attentions, guys. So believe in them. Go back and study them. Take pictures of them. Respect them. Respect those lines on the large chart, guys. Most of you paid good money for those lines. So I'm 2 rules deep. Both of them are true. I have momentum. I have a market that's likely to continue in the direction of the trend. I have absolutely nothing in the way on my large chart that could create a bounce. Guys, I have a freight train just cranking either up or down. And I want to find an entry. I want to take advantage of this. So I'm going to turn my attention to a smaller chart. And before we go to the entries, guys, I'm going to introduce you to the one thing. It's one thing. Only one. Solamente uno. Guys, 3 divergences in the same price range on the small chart. 3 losses of momentum. 3 cyan lines from a low or magenta lines from a high. Guys, this says don't take that next short. Don't take that next long. 3 losses of momentum in the same price range may terminate the trend. It becomes more powerful when you paid attention to rule number 1 and you realize that these are anything can happen triggers along with 3 losses of momentum. And it's more powerful still if it creates that little head and shoulders for you guys that trade those patterns. Third pivot's higher than the previous or lower than the previous from a high. This look right here, burn it into your brain, is the only thing on God's green earth that's going to keep me out of a trade when I have momentum and a clear path. It's the only thing that is going to shut down my high probability trend trade, guys. It doesn't happen often. But when it does, it's a great way to avoid some losers. So I have momentum. My path is clear. The large crowd has spoken, and I've chosen to go along with them. So I'm going to look for entry on the smaller, faster chart. I'm going to use a limit order because I am that good, he said in a cocky voice. I'm going to use a limit order to buy or sell a pullback. And that pullback is that shove that the small crowd creates. And I'm going to use that limit order to buy or sell that pullback at an area. Fibs, mid bands, and yellow 1-to-1s on the small chart. And I want those areas to be inside of triggers. And for the brand new user, for you guys that are trying to get it right straight out of the gates, favorable large triggers is your best opportunity for success. Favorable large triggers creates the smallest window where the market is most likely to continue. I like to call it the window of opportunity. Favorable large triggers means that both the large and the synthetic triggers on your small chart are overlapping one on top of the other like 2 snakes riding piggyback. Guys, it looks just like that. And when you shoehorn some areas inside of those triggers, life is good. Triggers define where the market is most likely to return. Areas inside of triggers define where the market is most likely to bounce in the direction of the trade. So when I'm looking for a trade, the first thing I do is I'm looking at those triggers and I'm saying, all right, if I get that pullback, these triggers represent the point where the market may return, where those price bars are most likely to come back. And then I have to look at them and say, in the areas inside are where it's most likely to bounce. Guys, the pullback is like throwing a tennis ball as hard as you can. And the areas inside of triggers are that brick wall that you're throwing it at. I don't expect it to bounce off of a trigger from the middle of nowhere. This red box, whether it's a fib, a mid-band, or a yellow 1-to-1, this red box represents the zone where the market is most likely to continue with the momentum, with the trend, with the direction. Guys, that's the point where the small crowd is most likely to fail. So you're going to have to work through this process for a little bit. You're going to have to watch the live market, work on your timing, get your poop in a group, so to speak, so that you can find these great entries. And let's use the spreadsheet. These are in the client trades. We'll come back to those, but let's go to the client trades real quick. Everything regarding entry revolves around large short advantages, guys. This is the only reason that you're even going to get into a high probability trend trade. If you have odds favorable momentum, that most current bar, separation between the small and large get below support, support's behaving as resistance, the path is clear. The large chart says, M, go look for an entry, but don't just jump in, silly. We're going to wait for a reversal bar. This is the first part of the process. Sitting and just waiting and feeling left out, and that fear of missing out, and wishing that you were getting paid, but you're not yet. And then this reversal bar prints, guys, and this reversal bar signals the beginning of the pullback. The pullback is that fight from the small crowd. The reversal bar is not your entry. The reversal bar says, hey, where is this price most likely to return? Somewhere from the bottom of the triggers to the top of the triggers, whether it's synthetic above large or large above synthetic. This green box represents where the price bars are most likely to return. I don't know where in there it's going to return, but I know that this is the most likely option. Price returns to large triggers. And once I've defined the triggers, well, I got to look for those areas because I need something for it to bounce off of. So my window, the window of opportunity, will extend in a short trade from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. So in this case, I have a fib, I have another fib, and I have a mid band. And this white box says to me, these are the points inside of triggers most likely to create a bounce for continuation with the large chart, for continuing with the momentum, continuing with the direction. Guys, at this point, once you define this window of opportunity, your job is to activate a limit order, to put that limit order in just below the lowest point of resistance and hope that the small crowd can push. Hope that they have it in them, that they have the money, that they ate their Wheaties, whatever. Because if they push to your limit order, a tick or two below resistance inside of favorable large triggers, guys, you're short. And you're not just short hoping it goes down. You're short because you traded a pattern that has been proven to win more than it loses. You're short because you had the advantage of momentum and a clear path, and you were able to pinpoint with insane accuracy where that trend was most likely to continue. And guys, this is your first 30 days with me. Your first 30 days is being able to define where the market is most likely to continue. It may be less. It may be more. I don't judge. It took me more because I refused to learn the process. I only looked for the trades. So let's go through it. Large chart says up. Large chart says clear path. Large chart has momentum. I'm not jumping in. I'm waiting for the small crowd to fight. I'm waiting for the reversal bar on the small chart. The reversal bar signals the beginning of the pullback. The reversal bar is not my entry, but rather it tells me to look for those triggers, large and synthetic. Are they wide? Are they one on top of the other? Are they overlapping? Because that's where the market is most likely to return. Price returns to large triggers. But large triggers aren't bouncy, so I need fibs, mid-bands, or yellow one-to-ones inside of those triggers. And I create my window of opportunity, guys. The point where the small crowd is most likely to fail, it's somewhere between this mid-band and these yellow one-to-ones. But because of the momentum on the large chart, because there's nothing on the large chart to create a bounce, your limit order goes 2 ticks above the highest point of support. This is your entry for the highest probability trend trade. Morning, Gino. How'd you shoot yesterday? Guys, once you define where the market is most likely to continue, you create this understanding. 82, great round. Price should return to triggers. Price should bounce off areas if this is going to be a successful trade. Anything below the triggers, I call this the wrong side of the triggers. Anything below the triggers is where the market shouldn't go. So any line, any fib, any mid-band, any yellow 1-to-1 on the wrong side of the triggers, guys, this is where your advantage is gone. This is not where the market is most likely to continue. This is where very often you're going to take a loser. This is going to be your 20 to 30% spot. So don't trip over a couple pennies trying to save some money getting in low. Take your best entries. Learn to trust them. Study them. In a downtrend, everything is screaming south, guys. The bottom fell out. The market is dropping. You're wishing you could just find an entry. And then the small crowd shows up and gives you the reversal bar. And you say to yourself, the reversal bar is not my entry. The reversal bar says, hey, Joel, go look for those trigger lines. See if they're favorable. And then once you look at those trigger lines and you're like, wow, that's where the market's likely to return, you have to say, but I need something for it to bounce off of. Fibs, mid-bands, yellow 1-to-1s. And guys, there's only one line inside of favorable large triggers here. Your window of opportunity is 1 tick wide. What a magical moment. Drop your entry, your limit order 2 ticks below, and hope for the best, guys. This is where the market is most likely to continue. These trigger lines are where price is most likely to return. Anything on the wrong side of triggers, above those triggers for a short trade, it's out of the equation. None of those lines mean anything to me. They might as well not even be there. This is my range where the good stuff happens, guys. And once you understand where the market is most likely to continue, your ability to define where it shouldn't go, this defines your first stop placement. And your initial stops will be 4 to 5 ticks above all the trigger lines for a short, below all the trigger lines for a long. And guys, it's either going to get stopped or it's not. It's either going to go in the direction of the trade or it isn't. You'll never be in control of that. And the sad thing is you'll never know. Because variety is the spice of life. I prefer 5. Some of you are cheap and you want 4. 4 or 5, it's a number. That's all it is. It's just a number. For me, it depends on the market that I'm trading. But typically 5 ticks is where I'm at. And if it were 4 ticks, great. Maybe it works. Maybe 5 ticks gets hit. You never know, Em. So that's just a general where the market shouldn't go. How's that for an answer? Because once it goes past these triggers, I've lost my advantage. And that's really what I'm identifying, is where my advantage goes away. But I do understand that it may go 2 or 3. Like if it overruns it a couple ticks, I don't want to jump ship. I'm going to force it to come get me. With all of those advantages in place, with momentum, with clear path, with the areas for bounce, guys, more often than not, you're going to get a reversal bar in the direction of your trend. This reversal bar, we call it a confirmation bar. And a confirmation bar says, guess what? Everything's doing what your indicator said it was going to do. That downtrend is continuing down. That uptrend is continuing up. You can move your stop 2 ticks above, 2 ticks below. Once again, 2 ticks says, let me give it a little wiggle room, but not too much, right? Could you do 3 ticks? Absolutely. Could you do 1 tick? Sure. But remember that the market is cyclical and it fluctuates, and you're going to get these little fluctuations. So a couple ticks puts you once again where the market should not go. And it's not uncommon to see you guys take the perfect trade, the perfect entry, get the reversal bar, and the damn small crowd comes back and stops you out. But now you've only lost $30 or $40 as opposed to $300 or $400, guys. And one of the biggest challenges that I see new users have is they get this reversal bar and the market's going in the direction of the trade, but they're still insistent on $300 or $400 of risk. And I'm telling you guys, you never know what the market's going to do. Right here, $100 deep into your trade, some jerk with $1 billion could sell 1,000 contracts. And before you can react, that $300 stop is hit. Before you can react, that $400 stop is hit. So put yourself in a position to understand these concepts, where it shouldn't go, when you should reduce risk. And what happens is, even when you take those losers, you're in a position to take smaller losers, which is going to allow you to take more losers as you go on and take more winners. So This is my first hour. Every day, guys, it's the exact same thing over and over and over. And you're going to get so tired of my voice that you're going to fire me one day because you're good at it. But until that happens, we're going to develop a little trust together. And one of the easiest ways to do it is to go look for the rules to be met on the large chart. So if I open up a large chart, let's just do it, right? And I say to myself, hey, check it out. Look at all that momentum. This one had the potential to break an area. I'm using hindsight here a little bit. This one had the potential to break. Notice that the momentum is solid all the way through. This one was actually a clear path. Guys, if I circle these tails on my large chart, what I can do is open up a small chart. And I'm going to go back and look for those tails. And my first tail kind of hovered in between. The triggers weren't overlapping, but support created a bounce. The second one had 3 divergences, probably not my trade. And then we come back and that one was perfect. And guys, this is the one that had a clear path. And that's the one that set up beautifully. And one of the cool things is you can go back over and over and look for these bars, look for these tails. And I don't know, the S&P was a little range bound the last couple days. There's a good looking one. This is also helping you establish the idea that patience is a pretty big deal, because there's a pretty good gap in between me having all 3 advantages. Where was that tail? Oh, it was right there on the pullback to support, right at the triggers. And that's the one that continued up. So guys, go back and learn these looks, study these looks, identify these tails when the advantages are present. And most importantly, talk to yourself about the advantages. Say to yourself, look at that termination that reversed the market. Look at that odds favorable momentum. Look at that potential to break. This reversal bar didn't make it to an area inside of favorable large triggers, but maybe my opportunity's coming. So what I want you guys to do is I want you to talk about it out loud when you look at your charts. I have momentum. My path is clear. Let me go define my entry area at an area inside of favorable large triggers. And if you get in the habit of doing this, this is one of the cool things about the human brain, is it believes you. If you say to yourself, I have the advantage of momentum, your brain gets excited about the momentum because it understands that momentum pushes a market in the direction of the trend. And if you say out loud, price has not reached an area, I have a clear path, I have room to my targets, your brain starts getting worked up because it knows it has the good stuff. And if you use the words, I do have an area inside of favorable large triggers, wild horses couldn't keep you out of this trade, guys, because you understand that all you're doing is trading a pattern that's been proven to win more than it loses. So you have to learn the looks, guys. You've got to be able to piece together momentum, clear path, and entry. The easiest way to do that, you don't even have to take a trade. Hell, you don't even have to have a live market. You can scroll back and circle those tails and check for entries. You can take pictures, 25 pictures of strong triggers, 25 pictures of weak triggers, 25 pictures of termination conditions, 25 pictures of a clear path, and take those entries. And guys, what you're going to do is you're going to take those pictures. I'll answer that in 1 second, Sergio. You're going to take those pictures and you're going to drop them into your spreadsheet. You're going to commit these looks to memory, but the task isn't only pictures. The task will also be writing why, creating this set of rules that goes with the visual. When I see this, smalls below the large, space between all red, when I see this, my brain needs to scream, strong triggers, I have momentum, rule number 1 met. And guys, if you create this correlation, you're never going to trade without momentum on purpose. And even more so, you're never going to try to take a trade with these weak, ugly triggers on purpose. You're going to say to yourself, my advantage is gone. Anything can happen. So I encourage you guys to go through and take these pictures, to look at these things, to commit them to memory. And if you're not sure about them, do me a favor. Drop your picture in the room and go, Mark, let's get a little feedback. And then Sergio, just because I want to answer your question before I move on to the next thing, when you go to the termination conditions section where it says understanding termination conditions, your large chart midband, Sergio, is only a termination condition if the large triggers are a full bar away. So do you remember the concept, price returns to large triggers? So there's this idea called the gap theory. And the gap theory says that if price accelerates away from the large triggers fast and furious and hits a midband or a fib or whatever, and the large triggers remain a full bar away above the reversal bar marker, if it's trending down below the reversal bar marker like here, if it hits the midband above, Sergio, this is the only time where that midband on the large chart is considered a termination condition. The only time where we'll say it's likely to stop the market. The only time where it's going to mess up your good time. And let me show you exactly what it looks like, because it happens pretty often. There's a beautiful example. Price comes off of Fibonacci support, gets all the way up towards that midband, and the large triggers refuse to come along. What this does is it keeps you from trying to take this long trade right here. It keeps you from trying to get in before that gap is filled. So that's when the midband behaves as a termination condition. So right now we've reached a midband. Fibonacci support has the potential to break, and my large triggers are not above the reversal bar marker, so the midband doesn't phase me. The midband is not a part of my termination equation. As you take these pictures, guys, I've got a little sheet for you to check yourself with. The sheet's called the High Probability Trend Trade Checklist. That is the second page. But this is just the basic concepts that we cover every morning. The same ideas that you need to be taking pictures of and annotating charts. Is the market coming from a strong bottom? Not mandatory, but it adds a little giddy up when it does. So a strong top or bottom is just a termination condition that reverses the market. Do I have momentum or do I have weak triggers? Guys, it should take you a day to learn the difference. Scissors open, scissors closed. It might take you a lifetime to learn to believe it and trade with it, but you'll have the lesson inside of a day. Did price reach an area? My triggers are below. Well, that's not a clear path. I should make the decision to follow my plan. That seems like the best course. No trades into the area. Guys, I don't give trading advice, but I sure show you stuff that you could avoid. If my small smash through but my large haven't made it, it's only the potential to break. It's not a clear path. It's never a high probability trend trade. It's one of those 50-50 looks. And if both the small and the large break through the area, the path is clear, the momentum is there. There's one of those tails a lot of you got into the market right there. Termination, potential, clear path. Know the difference, guys. Commit them to memory. Understand where the market is most likely to continue so that you can reduce your risk. Understand where the market is most likely to continue so you know where your stops go. Understand where the market is most likely to continue so you don't keep enormous risk on your trades, because now you fully understand where the market shouldn't go. The second page is the actual checklist, guys. The checklist is designed to get you into the market. That's it. It's not designed to teach you how to manage. It's not going to give you anything other than rules for entry. I've never had anybody follow this checklist to the letter and do worse than 70%. Is there anyone in the room that's followed this checklist to the letter and done worse than 70% documented? I want somebody to let me know if it ever happens. Nobody has in 5 years. These are the words that you should be writing on your chart when you take a trade. You should use the words odds favorable, momentum. You should use the words no termination conditions. You should use the words area inside of favorable large triggers. And if you do this, what happens is you're in the highest probability trend trade ever. This is nothing more than an entry plan, guys. That's all it is. It's a way designed to get you into the market with the advantages that it takes to win more than you lose. The KISS plan that I'm giving you right now brings it all together, guys. I've been introducing the KISS plan for over a year now. Yeah, guys. There's a lot of those, Morgan. You're like one of 5 that have reached out to me in the last couple days. John Novak, Mark Dean, Chris Novak, Melinda, Cam, me. Guys, no one will ever reach out to you and solicit crypto funds for us to trade for you. We won't ask you for money. If I want your money, guys, I'll call you. I'll force you to listen to my voice and my compelling story about why you need to give me your money. So anytime you see that, Morgan, thank you for putting that in here. Anytime you see that, ignore it. Someone sent me one yesterday, and it started with greetings and hello. Guys, you know me. I'm not going to start an email with greetings and hello. I'm going to be like, sup, Morgan? How's things? Erla, how's your world? Right? I'm probably going to swear at least once. So, guys, let's get into the KISS plan. The KISS plan came to be because I had a client that looked for all the trades. The KISS plan came to be because I had a client that not only looked for all the trades, but couldn't find anything but a darn loser because he couldn't keep his rules straight. He couldn't keep his advantages in line, guys. So the KISS plan is a stepping stone. You responded to him. Did they fish you after that? Did they come back to you and ask you to pay them? That's usually what they do. Is they'll get you to go, oh, hey, it is John Novak, it is Mark Novak. And then once they think you believe it's them, that's when they ask you for your account. Yeah, so always send me a message and go, hey, Mark, is this you? And most of the times it isn't. And I don't send out friend requests, just so you guys know. I don't. I never have. I won't do it. But I'll accept every friend request that you guys send. But I won't be the one to initiate that relationship because it seems sketchy. So the KISS plan is a stepping stone. Is a stepping stone in your learning journey, guys. The KISS plan is your first trade. It's not your only trade. The KISS plan is what's going to open the doors up for you to find the rest of the trades. And Ron, I'm going to quote you every day for the rest of my life. The KISS plan, the high probability trend trade, is not your get-rich trade. It's the one that allows you to see your get-rich trade. The KISS plan is designed to optimize your chances of success with the high probability trend trade initially, guys. And then through simulation study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. I hate AI. But guys, that's AI telling you that once you can read your indicators, you're going to write your own plan. Until you have the capability of doing that, this is your plan. I wanted to change the color on class feedback because I firmly believe this is the most important part of your education process, is making yourself vulnerable and asking for help. Stop accepting that you keep losing. Put them in the room and let's fix it. Your simple plan for consistency, ladies and gentlemen, begins with never fighting the large chart. Yeah, me too. No, I don't want my dumb TV, but I do miss my dumb phone. Define your entries, guys. Don't fight the large chart. Fighting the large chart is the recipe for financial suicide. My brother wrote this book. He's a best-selling author. How to Commit Financial Suicide in One Easy Step by John Novak. Chapter 1, warning signs your friends are in trouble. They're trading against strong triggers. Fighting the large crowd and everything that they want. Chapter 2, warning signs your friends aren't paying attention. We've all been that friend. Trade in determination conditions. Hoping areas break instead of allowing them to break. Guys, seek help immediately. I am that help. I can fix damn near anybody. Define your entry. Get into the market where the market is most likely to continue. Your entry is mechanical, it's methodical, it's pragmatic, which means it is just based in logic and patterns that repeat themselves. Once you're in the market, once you take that great entry, and great entries create very manageable trades, but once you're in, guys, that's when your pulse rockets. It's easy to get in the market for the wrong reasons. And once you're into the market, this is where your brain is going to tell you that you have something to lose. This is where your brain is going to tell you that you need to tighten your stops, that you need to move your targets, that you need to get out quick because what if? And guys, management is where the money is made. The entries are easy. Management is where the money is made, where profits are taken and not given back. So in the very beginning, when you're learning this process, guys, allow your management to be as mechanical as your entry. This management plan in the KISS plan is 100% if-then. If I take an entry at an area inside of favorable large triggers, well, then my stop goes 5 ticks, 4 ticks above or below where the market shouldn't go. And it looks just like this. If I take an entry at an area inside of favorable large triggers, then my stop is 4 to 5 ticks below those triggers. And that's it. Guys, there's nothing to do here. You're either going to get stopped out or you're going to get one of those reversal bars. And one of the things that the KISS plan is designed to do is to give you this methodical approach, this emotionless approach. As you learn to read your indicators, you will create your own plan based on your goals and your experience reading the indicators. If I get a reversal bar in the direction of the trade, well, then I didn't get stopped out. My new stop is 2 ticks below that bar. And once again, I'm sitting on my hands. There's nothing to do, guys. Put them on your heads. Get your darn hands off the mouse. The other thing that the KISS plan management plan is designed to do is to get you paid ASAFP. And guys, your first target from that great entry is only $100 away from entry. That's it. We got in at 56.50, we got out, or 66.50, we got out at 68.50, guys. 8 ticks on the S&P. That's $100. That $100 is in your account. That $100 can't be taken from you. That $100 is a catalyst for confidence. That $100 dries up your sweaty palms. There's nobody in this room that would just step over a $100 bill on the sidewalk. Don't do it in your trading. Learn how to get paid. Learn that it's more important to get paid than to hope you get paid more. At this point, you have nothing to lose. You've already been paid, and your next target is only $200 away from your entry. And guys, the whole basis of this management plan is to remind you that you would never be in this trade if it weren't for odds favorable momentum and a clear path. So now you've got to develop some trust in this look that it's going to hit your second target, guys. And by doing nothing and having nothing to lose, if you hit it, that's a $300 trade. $300 is it. That's it. You're out. Whether it runs for the next 7 days without a blip, guys, you're out at $300. Which means, whoops, that with one trade, 3 rules, 2 charts, and very mechanical, very emotionless management, you're on your way to a $75,000 year if that's the best you can do every day. For a little perspective, if the best you could do every day was one break-even trade, 25 grand. And you're like, but that's not a career. No, but hell, add 25 grand to what you're doing while you get better. Eventually, you're going to get better if you're studying, if you're practicing, if you're asking for feedback. And I don't think anybody in this room is going to find it difficult to make $600 to $800 a day once you have these things. And then 1,000 becomes easy. And then you've got people in this room, guys, and I love this, that use those prop firms and they're trading $1 million account and they're trading 25 contracts and they're doing $15,000 to $25,000 a day with the exact same trades, that were making them $300 to $400 a day. The only difference is they're trading more. They're trading more contracts, not more trades, not more setups, not more management plans. They're just trading more contracts on the best trades. So you're going to get this, and this is your reminder that you don't have to make it all every trade to make money doing this. But what you do have to know is why you will enter a trade. And you have to know why you will exit a trade, guys. In the beginning, why would you? How could you? How could you know why you're going to enter a trade. You're brand new. That's why we talk about entry rules every day for an hour. That's why I give you study sheets every day. That's why we go back and look at the exact same thing, because you have to know why you're going to enter a trade. You have to know why you'll exit. And guys, your rules, let me change this to entry rules. Your entry rules are based on patterns proven to win more than they lose. What does that mean? That means that if I take a high probability trend trade 10 times, I have to expect to lose 2 to 3 times. And I have to understand that I'm never going to understand. I'm never going to know when those 2 to 3 are coming. And guys, here's the thing. You might get 2 to 3 in a row. You ever started off a day with 2 losers and got shook and changed your plan instantly? I know everybody in this room has. I know I've done it. Guys, you have to develop so much trust in this pattern that you take it no matter what. And there's a gentleman named Mark Douglas, and he's no longer with us, unfortunately. But he used to do seminars, and he was amazing with the psychology of trading. And he and John Novak worked together for quite a while. And he used to say, if you had a coin toss and you flipped it 10 times, but one side was weighted, so you knew without hesitation, because you tested it and tested it and tested it, that it would land on heads 7 out of 10 times. Would you ever bet tails? Would you ever deviate from the plan that's been proven to win more than it loses, guys? Whether it's $1 or $1,000 a flip, it would be ridiculous to ever abandon the thing that has been proven to bring success. So that's what rules are. They're that thing. And you have to take them no matter what. You have to take them when the rules are met. If you lost the trade before, you have to take them when the rules are met. If you had a losing day yesterday, you have to take them when the rules are met. Because trades aren't about the one trade. It feels like it. Trades are about a sample, 20 to 30 trades, guys. Where are you at after 20 to 30 trades? And if you don't do the study to trust your patterns, you're going to change your plan every time you enter the market. The only reason to exit a trade with all the advantages is because your advantage is gone. Whether it's 3 divergences in the same price range, whether you reached your targets on the large chart, right? So understanding why you will enter and why you will exit, guys, what it does is it gives you core patterns that you can trust. And here's one of the things Mark Douglas used to say. Rules eliminate the need to know what's going to happen. Rules eliminate the need for you to go to happen. The second you think you know what's going to happen, you set yourself up for distress and sorrow, guys. Rules eliminate the need to know what's going to happen. So you have to know why you'll get in. You have to know why you'll get out. You have to understand these concepts. You have to commit these looks to memory. You've got to learn how to do this. Close these windows. Save these windows. All right, cool. So now I'm going to give you the gifts. Chart Reading 101. You're going to get it. Because Chart Reading 101 shows you how to learn how to get good at chart reading. High Probability Trend Trade Checklist. It shows you what it looks like to have your rules met and gives you a solid checklist so that you can take perfect entries. KISS Plan. So that you have a reason to get in and out. You know exactly what it takes, guys. Exit Conditions. To remind you of that. High probability, oh my gosh, I'm clicking on the same things over and over. Where's the one I'm looking for? There it is. Daily goals. Daily goals. So you have to remind yourself, base hits pay bills, guys. So every day I give you everything you need. You have all of these Word documents in both Word and PDF. I just dropped them in a zip file. You have the spreadsheet with over 400 pictures for you to study, with entries, with exits, with management. You have access now through that zip file to the PowerPoint that I teach. Entries, exits, patterns. We have gone through the rules individually, what they look like, what they mean to you, why they're important. You guys have the ability to simulate. You have a working copy of the software and a simulator, guys. You're playing Monopoly to learn how to be a real estate mogul. There is zero risk of loss. And if you're not comfortable, there's no shame in staying on simulator. The idea, the concept that the only way you'll learn is if you have a skin in the game, in my opinion, is absolute bullshit. Pardon my French. That's like saying I have to jump in the deep end without a swimming lesson and hope that I figure it out before I die. What a ridiculous approach to learning something new. But the thing is you need feedback. You need to know what you did right or wrong. That's where I'm at, guys. Every 15 hours every week to give you that feedback. Keep it simple. The people that look for one thing, find it. The people that look for all the things, find everything but. That's been my experience. Keep it focused with the KISS plan, guys. The only thing that you don't have from me at this point is experience. The only thing that you don't have is the repetition to become comfortable with the looks. That's what your next 30, 60, 90 days is for, guys, is to get comfortable with it. The easiest way to do it is to take a trade. Take a trade, post it in the room. Take a picture. And I want you to do this and watch this. I can point an arrow. This is my picture. I'm not taking a trade. I have odds favorable momentum. Why? Small's below large. That's it, guys. That's my rule number one. That's always my rule number one. And then I have to point out what's happening. Two areas not broken here. Which areas are broken? Large haven't broken. Large haven't broken, guys. Look at this gap. If you use this language, you have to say to yourself, from 85 all the way to 67 only has the potential to break. How do you guys feel about that? From 85 to 67. I have 3 divergences. That's a termination condition. My synthetics are up here. My large are down here. I know that my stop has to go. Oops, where's my basics here? We'll just put it here. I know my stop has to go up here. We'll do a heart. Do I want to get in at this midband and risk that much with only the potential to break in 3 divergences? And if you go through every time you read a chart, what you see that's good, what you see that's working against you, guys, what you're doing is you're creating the analysis of where your trade may fail. And then you get to make the decision on whether or not you want to take the trade. So that's my first hour. When I come back, we're going to look at charts, guys. And I'm going to tell you, there are not a lot of charts in this room. So I want you to open your charts, and I want you to take a picture of something. And say, Mark, what the hell is this? Mark, what does this mean? Mark, what are my indicators saying here? Mark, is this a termination? Mark, is this really odds favorable momentum? Hey, Mark, let's talk about this. Because if not, there's going to be this awkward silence. It's going to be a blind date, and we're going to be staring into each other's eyes with nothing to say until one of us goes cross-eyed, the other one giggle, and the date's ruined. So when I come back, post in this room, guys. Give me something to talk about. Post them, annotate them, let's talk about them. I'll be back in 5 minutes. Go stretch your legs. We're going to get back at it. So I'm going to scroll up to the top of the page, and we're going to look at the charts that you guys have posted. And guys, I want you to remember that everything that I talk about, everything that I look at on your charts, I'm going to try and pull it back to the lessons that we talked about this morning. I'm going to pull it back to the chart reading. I'm going to pull it back to the concepts, all those different things. I'm not judging you on your trades. My job is to look at what you've done, to identify momentum, clear path, and entry areas so that my newer users in the class are able to pick up on that concept. And guys, here's one of the things is there, it doesn't do any good to be the trade police. It doesn't do any good to say, hey, that's not an area inside of favorable large triggers, or he didn't have the best momentum, or why did he take this trade with 3 divergences? Guys, don't worry about that. Look for the reasons that the trades work. And a lot of times these trades that seem a little unorthodox have everything to do with chart reads. So we're going to use Pete's. And Pete said, this is a weak bottom. And Pete, it is and it isn't, right? 1, 2, 3, there's 4 divergences, same price range. The sellers kept trying and the buyers kept shutting it down. It's not technically a strong bottom, but that's a pretty good indication that the buyers have no desire to let the sellers get out. And guys, this is one of those ones, and Pete, I'm going to turn this into a lesson before we even talk about your trade. Rule number 2 gives you the ability to identify consolidation, guys. And I want you to see this right here. All right, shapes. Termination, 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 termination. Does everybody see how Fibonacci, how rule number 2 defined completely the range that this market was in? If I draw a box around that range, and that was the lowest point right there, that's one of those 50-50 looks. Guys, when you have consolidation like this, very often you're going to see one side get what's called the fake out breakout, and then it gets shut down and the market goes the other direction. And Pete, you capitalized on that a lot. So it rolls, the momentum is strong. And then let's go to the small chart read. Pete gets his reversal bar. The large triggers are up here, but the synthetic triggers are down here. Definitely not favorable large triggers. His areas for entry, his lines extend from probably 02 to 10. There's a fib inside of triggers here. There's a couple floating in the middle. That first correction point's pretty much out of the equation because the reversal bar printed on the other side of it already. And Pete gets in, and Pete knows that my stops go below the triggers because with this look, that's where the market shouldn't go. And he sits through a little bit of nonsense and eventually takes profit with all that momentum at fibs. And then when it starts to break and it pulls right back to support, right inside of those triggers with the potential to break, Pete says, check it out. With this look, I can catch a little cash back up to the next trouble spot. And Pete, it's absolutely beautiful trading. And I want you guys to see this. That was $8,750. And it all happened in about an hour and 20 minutes. Pete is the highest paid lawyer you'll ever have to hire. Guys, this is what happens when you start to learn. It's the same trades, more contracts. Beautiful, beautiful trading, Pete. Great read, great understanding that price may return to the synthetics, keeping your stops where the market shouldn't go so that you can grab hold of the advantages created on the large chart. I mean, everything about it is spectacular. All right, let's see who's next. Making myself dizzy scrolling. All right, Andy Man. All right. Strong bottom, meaning that there was a termination that created a full reversal. Odds favorable momentum. The path is clear. Guys, this is the same one that we looked at together as a classroom. Pull back directly to support right inside of the triggers. Do you see how it doesn't work outside of the triggers? That's why 4 to 5 ticks is pretty cool. Andy had like 6 ticks of risk on this trade if he had been there for it. That's where the market shouldn't go. And with all of these advantages, it goes right where it should have. And you know what? I wish there was an alarm going off too. We had the alarm guy, Andy, but he drank a lot and he was getting people into the wrong trades. So we decided you should probably just do your own analysis and be in front of it. Great, great chart. Great annotation. Everything about it. All right, Steve B. 3 divergences on the large chart. Good chance price is going down. I don't disagree. You took the first short from the very top. 1975. Okay, so you took it after the termination held. Small triggers rolled. You got below trouble. And you took it directly to the midband. Steve B, that's sharp. That's nice. That's letting a termination hold. That's letting small, I mean, that is solid. Let me get below trouble. And with momentum, let me get to the first place that may create a bounce. Rock star. And then nothing where it gets sketchy. And then after 3 divergences and 3 divergences on the small, you could have taken that momentum trade down. Great chart read, Steve. Guys, you don't have to be in a trade to get better. You don't have to be in a trade to get smarter. Because if you go back and start looking at things and you start annotating things and you start saying, hey, with this look, I could have, eventually you will. Steve B, thank you for sharing that. Next one. Midband holds. Recognize the term even before the second divergence. Amen. Would have taken a shot in the past because of the fib in the midband. Recognize the term on the large chart. No trade. Rules finally getting through my thick skull. I love that, Steve. You are in a room of thick-skulled individuals. Traders tend to be. Traders are very alpha. And traders absolutely hate to ever consider that they could be wrong about anything. There's my thick skull. But rules for the win. And I'm telling you, if all you do is talk about rules, it's absolutely amazing how well you can do. Great job. And I love the pictures of the ones that didn't work. So let's do it again. 32.25. Termination condition. Triggers roll. Let it clear. Run it down to the midband. I did these backwards, I guess, Steve. Freaking amazing. Clear path. Tail into momentum. You take one off. And then you get paid the rest up top. Nicely done, man. Ron's got his pirate thick skull. Great trading, Steve. Great chart reads. Thank you for sharing those. And man, I want to look at this one more time, guys. This is I think where the difference comes in. Annotating charts feels like work. Annotating charts you think is going to get in the way of your ability to trade. Guys, I'm telling you, some of the greatest pictures you can take are the losers that you avoided because the rules weren't met. Because what you're doing is you're reinforcing the confidence in your rules. And Jen used to be one of the best. Jen would say, I can't get my damn rules met. Mark, here's 10 pictures of why they're not met. And I feel like this is one of the most valuable pictures you can take. Steve, you know how to take this trade. You don't have any question on the right way to take this trade. Guys, it's not the winners that mess us up. It's the avoidable losses. So I'm thankful for those pictures. Thank you for those. All right, Steve Diego. Some charts from yesterday and today with a new flex bar trade I'm studying, which you may hate. Steve, I could never hate your trade. Worst case scenario is I just hate you. Just kidding. Couldn't hate you. I can't quit you, Steve. Did you put rules for your flex bar trade? I'm curious. And Steve B, I learned a lot in this room as well. let's see what we have. Here is odds favorable momentum and a clear path. And Steve says, if I jump in with odds favorable momentum and a clear path, it's hard to stop a market. So he makes $200 in 12 seconds. Is anyone opposed to making $200 in 12 seconds? I'm not. That sounds like a great way to make money. $200 in 12 seconds. It's a little more than a rodeo, but that's not bad. All right. Steve, large and small, turning up. I'm trying to figure out where we're at here. 12, 14, 13, 14. You are taking the gap in between the triggers and the fib because you're left of the small triggers, which is the momentum phase. Okay, so this is your flex trade. Large triggers turning up, cleared trouble. So, all right, Steve, can we talk about your flex trade? Can I show you what I see? And what we'll do is we'll kind of compare the whole thoughts between each other. And I think you'll dig it. So, large chart. This is what I see on the large chart. I see a 50-50 that failed. And I see the small triggers turned up. That's my large chart read right here, where we're going. The 50-50 isn't working, and I know that it's failing, or at least has a better potential to fail, because I've got two divergences on the small chart. Are we on the same page so far? So this helps me identify this failure. When the large triggers roll and the small get above them, believe it or not, guys, that's odds favorable momentum and a smaller time frame. So I'm taking a failure here and coupling it with odds favorable momentum here. And guys, when I have odds favorable momentum on the small chart, as long as price stays left of the triggers, let me do that, small triggers, I can go that direction. And it's not until it closes on the wrong side of the small triggers, until I get that reversal bar pointing the other direction, that momentum is lost, that phase is over. So Steve, termination or failure on the 50-50 defined by these, wait for the roll. And what you did is you let price break the midband and snap right back to the small triggers, Steve. And what that is a continuation look. Hold on. That's just a continuation look. I take so many pictures, sometimes it's hard to find them. Let me see if I can find it. And I'll show you the exact entry. I took the exact same thing this morning, Steve, because it's such a good look. And that was kind of it right there. Same thing. Everything says up. I'm coming off the term. I let it roll. Let those small triggers roll and snap back right at the midband. And it creates an opportunity. And that's precisely what you did. I don't hate this trade at all, Steve. Not even a little bit. And I think your target is perfect. I think that everything about this is an outstanding chart read that led you to find the next trade, to find the trade that works. And true story, Ron takes this exact same trade and he takes it up to the reversal bar marker. When he gets those divergences printing from a problem area or from weak triggers in the middle of nowhere, it's the exact same look, and he takes that little chili dog trade right up to the reversal bar marker. It's the heartburn trade, but it doesn't affect me anymore. Same thing. Termination, triggers roll, snap back to the large, right there at the mid band, quick little pop, boom, bang, right out, $100. And again, could have held it. Oh, you did, all the way down. Steve, this is freaking outstanding. This is you finding the next trade, man. That's all it is. You're finding the next trade. Odds favorable, clear path. Let's make money. Let's get out. Let's get out. Let's make money. Let's get out. I mean, just out freaking standing. Guys, once you understand momentum and a clear path, once you believe in those two concepts, once you have those, the sky's the limit. And then you start finding these cool little things that happen after termination conditions, right? So Steve, that was your flex trade off the termination with the triggers roll. See how it pulls back to the small triggers? That was your flex trade. Right there, right to the mid band, right to the large triggers. And that's the one that gets you up to fibs. Termination, small triggers roll, buy the pullback to the small triggers. And guys, this isn't a new concept. Nexgen started teaching this in 2004. In 2004, Nexgen started saying when Fibonacci resistance holds and the small triggers roll, sell a pullback to the small triggers. You know what it looks like, Steve? It looks like your flex trade, brother. Send John Novak a nickel. He did it first. Great chart reading, though. This is the stuff I get excited about. I get excited about you guys taking your basics and growing and finding more success. It's the little things. All right, let's see what we have here. Termination, odds favorable. So it's not a flex bar trade here. This is just a momentum trade, Steve. This is everything Nexgen teaches. Break, pull back, giddy up, beautiful exit. I love it. And then you turn it into a trend trade and get out at trouble. Momentum trade turns into trend trade. Great annotation. When my momentum dies and everything is right, it typically turns into a trend trade. Everything was right. Freaking outstanding, Steve. I love it. And I like that you consolidated your annotations a little bit. Just makes it easier to read. So Steve, this is very much just a momentum trade, and I think don't deviate from what you're doing. Don't change your plan because I'm doing this. But just for everybody in the room, you'll begin. I will, Em. Give me just 1 second. You'll begin to see things once you get that terminate the basics down. So when the top or bottom is in, when you get that termination, you have room to your targets, your entries at the area and triggers. Where'd your other one go? When you get that termination, breakthrough, entries right at the area at the triggers. It's a perfect trade, Steve. It's a beautiful trade. So what I'm talking about, Em, is how momentum trades turn into... So the one word that he didn't put on there, M, was trade. How does a momentum trade, or a momentum trade that fails turn into a trend trade? Fails. That was my Southern coming out there for you guys. And I'm going to use a picture over here for it. So we're just going to look at the small chart. So if the large chart's perfect, Em, if the momentum is there, if the path is clear, if life is good and everybody's happy, there's some rules that get you in on this bar right here at the fib. And this is a momentum trade. And a momentum trade relies solely on momentum. That's it. That's the only reason you're in it, is because both charts are absolutely screaming one direction. So the idea is that as long as these price bars keep cranking up and don't give me a reversal bar on the wrong side of the triggers, this market's going to continue up. It's a fact of life, and we'll go look at some examples. Once I get a reversal bar that closes on the wrong side of the triggers, my momentum is over. I don't have momentum anymore. I can't call this a momentum trade. That's a great exit because I lost momentum. Are you with me so far? Rules met on the large chart. If you decide to jump in, that's your exit. Yep. Odds favorable, potential, or clear path. Because this is your high probability trend trade entry, right? The pullback to support inside of favorable large triggers. So let me show you what happens. I love it when you have aha moments. If I take this trade from here to here and I exit, right? I might make, I don't know, a couple contracts. I might make $100, whatever. Momentum trades aren't home run trades, Em. Momentum trades literally rely on momentum on both charts. Once it's gone, F it. But then, when the momentum trade fails, and let me write it the whole thing out. When the momentum trade fails, NAD, and the large chart is perfect. That momentum trade failure typically results in a trend trade. What does that mean? That means that if you don't exit, if you choose to not exit your momentum trade with a loss of momentum, and that's up to you, well then your stop has to go where the market shouldn't. 4 or 5 ticks below the trigger lines. M, are you cool getting in right here, being up $100, and then having to put $500 risk, hoping the trend trade works? Or does it make more sense to exit with the understanding that you can get right back in on the trend trade? And this is management. And what this means is that you have to have some faith. You have to have some faith that it's going to pull back. And there will be times, and let's go back to Steve's picture, where Steve says, I'm willing to take this entry, right? Everything is perfect because if it retraces, there's my entry point. And Steve says, why would I exit 2 ticks before my entry point? That's stupid, Mark. What are you thinking? I'll just go ahead and I'll keep my stops in place. And he's willing to take this risk. And then, you know, that's kind of the same thing. This is a short drive to Downsville, and this is a huge run to Downsville. Absolutely you can. And that's the great thing about what we do is most of your trades. So if I exit right here or enter right here, right? Everything's going down. I like it. The path is clear. I've got a stop in place. It's going down. If I get a close on the wrong side of the triggers, I'll exit this trade and I'll look for the next trade. And that's exactly what I'll do. And it's either going to take me out or it's going to go down, and I don't have any say in it. But the second I'm out of this trade, I can take another trade. And the second I'm out of that trade, I can take another trade. So just because the trade's over doesn't mean that the day is over. It doesn't mean that we're done doing what we do. And the better you get with reading your indicators, the faster you can speak out your advantages, the quicker your reaction time will be to take that next trade. And you know, Pete is one of the best in the room at it. Sorry, Pete, got to put you on a pedestal. Because Pete will take the trade, and when his advantages are gone and the trade fails, he's got so much experience in the market that he'll turn around and go and make money the other direction because he realizes that everything's changed, that it's no longer short trades and now it's long trades. And this recognition here shows how in tune Steve Diego is with momentum and path and expectations and bounce points, because he says, I'm not worried about it. I'm good. Here, he may not have had the same reaction. And the better you get at reading your charts, the easier it gets to do all these great things. Good stuff. And then did we look at this one, Steve? Termination, odds favorable, nothing in the way. Get in past trouble, get out at trouble. Life is good. 9 seconds, $195. Amazing. Guys, I think one of the things that happens to new users, and if there's anyone other than me that's felt this way, feel free to put some minds at ease. I felt like every opportunity in the market was the only opportunity. I felt like every trade was life or death. I felt like every fluctuation on a small chart was the end of my world or the beginning of a better world. And I put so much pressure on the trade and the result that it clouded my ability to focus on the process. And I think that happens with a lot of people. Once you are focused on the process, once you're focused on the advantages being the reason to take a trade, it takes a lot of the pressure off. All right, Jay, little feedback on my read. Strong top, absolutely. 50-50, without question. Weak bottom, not a clear path, 1-to-1, waiting on possible reversal and triggers to get in the correct positions. I love it. So Jay, let's cover two things. Strong tops and bottoms happen on the large chart. You don't have a weak bottom. There's no such thing as a weak bottom on a small chart. Not at all. Strong tops and bottoms are 100% large chart because terminations happen on the large chart, Jay. And in order to have a strong top or bottom, you have to have a termination that also reverses the market. So absolutely beautiful read. This strong top increases the likelihood that the 50-50s work. Another beautiful read. You said, I've got triggers here and triggers there. I've got 1-to-1s. I've got resistance. My entry isn't perfect, therefore I'll wait for a reversal bar before I enter the trade. And that was crude oil. And let's go see what happened. There's Jay's read. And I'm going to circle the tail, Jay. There's your reversal bar right off the 1-to-1s inside of the triggers. So Jay, your job, because you talked through it like an absolute freaking rock star, is to show me this trade. And then if you didn't take that trade, you sure as hell better have taken this trade. Guys, every one of you in this room better be showing me this trade if you think you understand a plan. That's the best of the best. That's the one that makes children cry. It's so beautiful. Jay, great chart read, great analysis, great patience. I hope you took that trade. And I hope you let it run. All right, this looks like Miss Cindy. Mid-band holding. All right, so is resistance, and so is resistance, right? So Cindy, it's not just the mid-band holding, is it? It's resistance and all the triggers below. Your mid-band means nothing. You didn't get burnt. You burnt yourself. Don't change the language. Everything says down, and Cindy, this was the 50-50. Where you have it circled. Are you with me in here? You should blame this one on your husband. This is the 50-50. That's a good look. Cindy, what's the biggest killer of a 50-50? Divergences. You had big, ugly split entry, split triggers, and you take a tiny little half reversal bar snap back to 1-to-1s without momentum or a clear path. You're giving up two advantages. And the fact that you held that terrifies me. You held through after 1, 2, 3 divergences in the same price range on a 50-50. You held from 16 all the way, 61 all the way to 78. 17 points. Hold on. My math sucks. Let me do something here. Guys, I told you I'd point it out. 17 points at 20 bucks a point equals $340 of risk times 6 contracts. So Cindy, I'm not throwing stones, but you risked over $2,000 when every indicator you had said get the hell out of that trade. Does that make sense? And this is where people go, but Mark, I got paid, dude. But Mark, I made money. But Mark, look, I'm rich. Where are you? Guys, this is a rough way to make a living because you didn't use this pivot. You didn't use this pivot. You didn't use this pivot. Everything changed. Odds favorable, momentum up. Termination condition held. Small triggers rolled against. Large triggers rolled against. Does that make sense, Cindy? No, don't be sorry. Don't ever be sorry. So let's do this. Let's turn it into a lesson. I have to point out how absolutely flabbergasting it is to leave $2,000 against so many problems. But check this out. When price reached resistance, Cindy, you're still thinking down, right? Otherwise, you wouldn't have held that long. You could have exited this one and taken a little hickey, right? Or when you got to the next divergence, made a couple bucks, got out with the 4th divergence and said, let's just see what happens. And then it's cranking up and it's cranking up and it goes right to that spot, right? And you're like, you know, it might hold, but why would I risk it? This failed, multiple divergences, small triggers up, background's green. Why would I just hope that this fib holds? Let my small triggers roll and I'll sell a snapback to them because my risk is minimal and now it's going in the direction and my small triggers are going in the direction and I'm on the winning side of those. And then from here, you take what is pretty much a conservative approach to your target. And it's still a better entry than the I hope this goes down entry. Does that make sense? Patience is hard. But gosh, we're so good at recognizing advantages. You're so good at recognizing advantages, you deserve a better entry. You've worked too hard to not get a better entry, I think. All right, let's see. Odds favorable, path not great. What does it mean, path not great? Closed at the 1-to-1. Other trades stopped. Why triggers dumb trade? I love the self-analysis, Jonathan. So check this out. Termination, everything is screaming down. You had 0 room to target. 0 room to target. That's not a, yeah, that's the not great. I get it. But you're relying on the momentum. And Jonathan, as long as I don't close on the wrong side of those triggers, it's going down. I think you handled that one well. And then got stopped out. So you tried to go short. Let me see what happened. You asked why 4 to 5 ticks above the triggers. He got stopped out 2 ticks above the triggers on the short trade off of him. He got stopped out almost at the high. I see why you did it, Jonathan. They just wanted to go a little bit higher. If you're gonna have this HVA line on there, man, you gotta learn to trust it or wait for it. Right on. High five her. She's doing great. Have her high five you. You're doing great. Jonathan, I think this is just bad luck, brother. You had that 50-50, no divergence. Everything pulled back to the large triggers, and it just overran a little bit, and it went to your HVA. I think you had the right idea. So other trades stop. Why? Triggers? No. Has nothing to do with the triggers. There was a collective group of assholes that wanted to go just a little bit higher, and they stopped you out. That's it. And I wonder if you were 2 ticks above the reversal bar, it still would have been close. This is one, Jonathan, that I'll retake. Off an HVA, correct side of the triggers, every indicator's down. These HVAs, they know where they are. They know where they are. That's the seller's line in the sand. And Jonathan, one of the things that you can do, one of the things that I've been known to do, is if I have an HVA, I'll spend the extra 30 or 40 bucks to get above it. I hope that made sense. I like both of your trades, man. And then there is everything says up. You jump in, you jump out. You jump in. Momentum trade fails, turns into a little trend trade. You get out, you let it clear, you get in, you chicken out. Nope, right at 1-to-1s, didn't chicken out, just no room to target. You let it clear, you get in, you get out. Jonathan, this is great, dude. This is great. This is great. Everything says up, you go up to trouble. Everything says up, you go up to trouble. Everything says up, you go up to trouble. I mean, holy crap, Jonathan. Amazing. Amazing. And I'm not saying you should enter at the HVA. I'm saying that if you're going to have an HVA that you use for analysis, you should understand that the market may go to it and maybe put your stops appropriately. Does that make sense? I might have re-entered at the HVA, or I might have waited for the HVA. But Jonathan, you have such this advantage knowing that it's right there and it lines up right with everything, and it's pretty cool. I think your trading is pretty rad today, Jonathan. Great job. All right, Cheetah. Strong top, odds favorable. What about your path, Cheetah? Termination, potential to break, or clear path. What did you see? No, not correct. That was 3 options. Did you see a termination? Did you see the potential to break, or did you see a clear path? That was like asking my wife. There's no such thing as a possible termination, Cheetah. It's either a termination. Here, hold on. Get off of there. So check it out, Cheetah. It's either a termination, it's either a clear path, or it's potential to break. Those are your only 3 options. Never in the history of teaching this class have I said that's a possible termination. Potential to break. Perfect. That's exactly what I wanted you to realize. What does that mean? That means that it's not broken. It means that it's not a clear path. And all that does, Cheetah, is it puts your management hat on. Does that make sense? When you answer the question, whether it's a termination, a clear path, or potential, it lets you know how you need to think for management. It lets you know if you need to be a little more aggressive. It lets you know if you need to wait for a better entry, right? And Cheetah, you entered at the area. And again, Cheetah, this isn't for you. This is for everybody else. That's an area, that's an area, that's an area, that's an area, that's an area. Why did you pick the mid-band? Because it's an area inside of triggers. And all the other areas are where the market shouldn't go, right, Cheetah? So guys, if I'm struggling with entries, this language pays huge dividends. If I'm struggling with getting run over on 50-50 trades, identifying that 50-50 trade pays dividends. So let me show you how my read goes. Oh my gosh, I'm coming from a strong top. That creates advantages for short trades. I have odds favorable momentum. That creates advantages for short trades. This area, because of that strong top, because of this odds favorable momentum, well, it has the potential to break. And holy crap, I have strong triggers and only one line with clearly defined risk. to see if that potential falls through. And then once I'm in this trade, I know exactly where my first trouble spot is at 47. I may want to manage aggressively if something changes at that area. Cheetah, this is a beautiful trade. And I appreciate you a lot for letting me turn it into some annotation lessons. And I appreciate you a lot for giving everyone else in the room the opportunity to understand that when you speak yourself through advantages, you know what you're getting into. And Cheetah, freaking rock star. How far did it go, man? And can I ask you why you chose 20? 24. Why did you choose just a number in the middle of nowhere? Why didn't you take a 1-to-1? Why didn't you get out at a fib? Why was floating in space your choice? And if you know the answer, you don't have to answer. But wouldn't it suck for this fib to hold and reverse the market and you were holding out for 6 ticks below it? So remember, guys, Fibonacci lets you know where decisions might be made. Just above 22 is cool. I'm watching it at that one though. Great trade, Cheetah. Awesome trade. And remember, guys, the annotation isn't for me. The annotation is so that you can come back and know what you did right or wrong so you can repeat things good or bad. Steve Diego, check it out. Weakness from the middle of nowhere. 2 divergences, get above trouble, take it to the reversal bar marker. Steve Diego, this is your flex trade, a la Ron. And I love the annotation. Not a trend trade, counter trend, white bar, really shouldn't work trade. I love it. Ron says, this is stupid, but it works more often than it doesn't. Price went within 3 ticks of the white reversal bar. What a great exit. Ron, I hate how much I like this trade now. M, this is not your trade. Brand new users, this is not your trade. You guys that aren't consistent every day, this is not your trade. Resist the temptation to take trades because you see them in this room, guys. This is a lot of study. If triggers broke the first divergence, does that mean it's out of play? I've got my new prize pupil here. Absolutely, Emily. Is it Emily or just M? Sorry. I'm Southern. It goes to correctu. I love it. Once the small and large get below the area is broken. I love that. You are my favorite new username, Susie, now. Once small and large get below, this one's out of play. Guys, it's the same thing that happens on the large chart. I love that you got that because people don't get that right off the bat. Great job. Steve, I would watch his trade because it lines up with what you're doing there. It's pretty cool. And what's even cooler is you guys see different things and have different reasons, and it's the same thing. Clearly, Jen. Oh, I hate that I have to play favorites now. All right, Miss Cindy. Termination, everything rolls, strong triggers, and because of that, Cindy says, check it out. This is a termination mark. I know it's a termination, but I have a strong top. I have the best momentum ever. I have every indicator that points down, and I have no divergence as I pull back to the area right at the triggers, and I know where my stop has to go, and once I get the reversal bar, I can minimize it to virtually nothing. And Cindy, beautiful, beautiful. I want to be you when I grow up. Isn't this easier than having that giant gap and all that scariness and holding for big, ugly retracements? I don't have the intestinal fortitude. I'll tell you guys right now. I have no ability to do that. Cindy, out freaking standing trade. Do that every day for the rest of your life. And you're going to feel compelled to buy me a pony for Christmas. I feel it. That's what's going to happen. All right, Kurt. Strong top, 0 trigs broke. Perfect. Absolutely perfect. Momentum starting to wane slightly. As long as, hold on. Oh, it's not gonna let me blow it up. We're gonna do something real quick, Kurt. We're gonna have a lesson. Get in there. Here it is. Whoops. We are gonna have a quick lesson, and I love this lesson. And this is one of the lessons that I had to learn. John Novak gave it to me. I'll just put you on the desktop. Here's another little trick that my brother taught me. Is when something needs to be blown up. Where'd it go? There it is. Check it out, Kurt. As long as I'm still outside, I have momentum. Those scissors aren't closed, man. You can sneak a piece of paper in there, right? Once that line gets inside, cool. So it's waning. And I say this, Kurt, not to pick or anything, but what happens is people convince themselves that this is the end of it. And people go, I'm going to watch the trigger lines and I'll be able to tell when the momentum is gone. I'll be able to see it slowing. I'll be able to see all this. And I want you to see something pretty awesome. We'll use this circle just for grins. Do you see that little hitch right there? That little bump? Do you know how many people skip that perfect trade because of that little bump right there? They're like, oh, momentum was slowing, Mark. It could have rolled. It had the potential. Guys, if there's separation, giddy up is in full play. And then, Kurt, you also had a clear path. So not only did you have momentum, you had a clear path. And you were freaking brilliant to say that it's not 4 ticks. It's all of that. It's that whole room. And why didn't you take the entry? That's the question, Kurt. Why the hell did you miss that entry? That is a fair reason. I hope it was something great. Absolutely beautiful, and momentum carried you to trouble, right? That's the one. Water, gotta hydrate, I guess, you know. Odds favorable, clear path, pull back to the area inside of favorable, large triggers. So, Kurt, I think it's pretty cool that you went back and marked it up and talked about it and all that good stuff. Because now you have one more where you can take that picture, copy the link, go to your spreadsheet, go to your favorite looks, and drop it in there. No, it has nothing to do with me. I just say the same thing over and over. Kurt said losers miss this entry. Hang on to your feelings, guys. I used the L word. Why did Kurt say that? Because it's freaking spectacular. It's a pattern that repeats itself. So what do you guys think? That divergence printed. Is it really the perfect trade with one divergence? How many does it take to stop a high probability trend trade? Does anyone remember? I forget. It takes 3. It takes 3. It takes 3. It takes 3. Guys, if I had a nickel for every time I let myself get talked out of that trade for one divergence. I love this trade, Kurt. I'm glad I stole it and put it in there because I want the world to see that short trade. And then let's compound. Can we keep doing lessons on it? Because, guys, I'm going to run out of lessons. We're running out of pictures. If my momentum trade fails, close on the wrong side of the triggers, and the large chart is perfect, very often it becomes a high probability trend trade. Does everybody see that? For you guys that are leaving 173 pounds of risk on your momentum trades, you could have got back in, right? You could have made money, got paid in the bank, got back in, made money in the bank. Love it, Kurt. Great job. I see him. Don't worry, Pete. I'll get to him. Thank you, though, because I am notorious for missing yours. Termination, odds favorable, didn't take the pullback, gets in on the other side on that little snapback, momentum style trade, exit. Pete, this is why Pete said that. Exit with the loss of momentum, enters the high probability trend trade, gets paid at trouble. I mean, I promise, Pete and I did not rehearse that, Kurt. How cool is that? I mean, come on. I can't make this stuff up. I have never met Pete. We are not on live stream. He's not going back and figured out a way to annotate charts after the fact. Guys, that's everything. That's everything that we just talked about. $60 short of the daily goal. 2 trades. Let's see what the next one is. That's all right. Pete usually steps in the foolishness at least once a day. I do too. Oh, same one. And then because of the momentum, you held it right to trouble and didn't care what happened next. Guys, remember when we said, I'm going to use this picture. We focus on the high probability trend trade because it teaches you to read your charts. And once you're good at your chart reads, you'll understand where the market is likely to stop. You'll understand where the market is likely to continue, and you'll understand where the market is likely to go. And here's the deal. Until these become second nature, you need to keep studying. And until these become second nature, you need to keep posting in the room. And until these become second nature, guys, you got to keep asking questions. My brother is dying to fire me. He tells me every day, if you don't get some class interaction, I'm firing you. So you guys, just job security, I appreciate it. I'm just kidding. I'm just kidding. Nepotism, full blown. Will it bounce from this green line? Hell, I don't know. Nanda, how could I know? What kind of trade did you take, Nanda? Well, you did take a short trade. So, Nanda, this is where I tough love you a little bit. All right? Because we're on about day 5, and you still refuse to do this for me. Do you have odds favorable momentum? Okay. Do you have a clear path? Okay, so here's where you need help, Nanda. The recipe for a clear path is small and large triggers get below the area. So this is a clear path. This look right here only has the potential to break. Smalls through, large not, no clear path. What does that mean? That means that I've got to make sure that I'm not sacrificing, and let's do this picture real quick. And you're going to love this, guys, because eventually you're going to do this. Eventually you're going to be like, I'm going to do this just so Mark will shut the hell up. So I'm going to take our rules, Nanda, and it doesn't even have to be a high probability trend trade short, okay? We know so far that I'm operating without a clear path. Does that make sense? You do have momentum on the large chart. This is rock solid. I love it. But I don't have a clear path. So let me make sure that I don't sidestep some other advantages. Well, I have 2 divergences in the same price range, which is a slowdown. My entry is from the wrong side of the small triggers, and the triggers are weak, which is a little detrimental. So now not only do I have a clear path, but my small chart is telling me things have the potential to change. And you've got your stop set up for a trend trade. Totally cool. So Nanda, one more thing. If I were to take this trade, my highest chance of success, my least amount of risk, and this is why you have to annotate, and this is why you have to use language. My highest chance of success, my lowest risk, comes from an area inside of triggers, not jumping in at the bottom of the move. So Nanda, I don't know if it's going to bounce or not. I have absolutely no idea. What I do know is that you could have taken a potential to break 50-50 straight from the area inside of favorable large triggers, and instead of having 3 points, you would have had approximately 3 ticks of risk. This is why annotation, as you guys learn, is important. So let's go see what happened. Where were those 1-to-1s? So there they were right there. There was your entry. There's your third divergence. How long are you going to hold this trade with 3 divergences and only the potential to break? Remember that entries are advantages. Exit conditions are a visualization that my advantage is gone. So it only has the potential to break. I've got 3 divergences in the same price range. I've got weak triggers. Now my areas are on the wrong side of the triggers. Does that make sense, Nanda? And I promise you, if you guys get to the point to where you start talking out these very basic concepts, you're going to get very consistent. Because Nanda, I love this entry. This entry gives me ridiculous risk. Because not only was it only potential and I got 3 divergences, once I get to the wrong side of the triggers, the reality is it could go to any of these areas. I have absolutely no idea which one. That's a great picture. Great picture. Great opportunity for some lessons. Does that all make sense? Cool. And I'm telling you guys, you're stuck with me in this room. And Nanda, you're so good on momentum. That's your big one. Your momentum is freaking amazing. We need to get you to recognize whether or not you've reached trouble and be okay with not trading into it. And then eventually, if you're gonna jump in, that's gonna. No, you're speaking in absolutes, right, Nanda? If it doesn't have a clear path, it bounces back. No, of course not. Right here, it didn't have a clear path, and it kept going, and it kept going, and it kept going. And there it bounced back. There's 3 times that areas broke. But there's 1, 2, 3, 4, 500 where it doesn't. So Nanda, this is how I want you to think about termination conditions. If I reach an area, it's more likely to create a bounce than to just break. That's it. That's the only thing. No absolutes. No definitive. No has to, going to. If I have weak triggers, I don't know what's going to happen and it may retrace. If I have strong triggers and nothing in the way, it's more likely to continue in that direction. So what we're doing, Nanda, is we're taking that momentum and we're saying, let's take it to the next area. Let's take it to the next area. And once we get to that next area, let's let the trigger lines tell us what we need to do. I love it. What a great lesson. And then once you get the basic concepts, the more advanced ones start to come into play. Wonderful chart. Thank you for that. Steve Diego, very seldom do I take the trend trade after your momentum trade fails because many times I see the follow-up trend trades fail you mentioned in your discussion with M to look at the large chart. You could expand on what to look for after momentum fails for follow-up trend trade. 100% Steve. Great. Things that I take for granted. When the momentum trade fails, there's only one reason that I would look for the trend trade. If the momentum trade fails, there's only one reason only. The reason is one. Cindy, solamente uno. Odds favorable, momentum, and a clear path. The only reason I would look for the trend trade is because my rules are met. Isn't that crazy? What a Sunday school answer. The only reason when this momentum trade fails, let's go back to 701. The only reason if a momentum trade fails, I would look for the trend trade is if my large chart says go. So if it's a clear path. But here's the deal. Mark, what if it's one of those 50-50s? Well, then when my momentum trade fails, I'm still going to exit. And if I have no divergence on the failure, and it comes right back to support inside of triggers, well, then I'll do it because my rules are met. So it's totally a Sunday school answer, Steve. But the only reason I would look for it is if my rules are met. And if I can't think fast enough to determine that they are, well, then I've got to sit on my hands and do nothing. But it's always better for me to take an exit on a momentum trade that fails rather than to hope it turns into a trend trade. Because it's a difference between collecting money and not. And I like to collect money. And if you guys are using something like Apex with that trailing drawdown, holding trades like that, if the trend trade fails, that's how accounts get blown out really quick. Up 21 grand between the two accounts. Beautiful Scottsdale weather. Go find a tea time, Pete. I love that. I love that. And Em, I saw your question. He's been in the room on and off. And don't take this the wrong way, but nobody's ever obligated to answer questions like that in the room. The answer that I will give is Pete has put a tremendous... No, don't be sorry. It's okay. You did it very respectfully. Pete has put an enormous amount of time into his study and crafting his plan. And that's the thing. Everybody's different. Everybody's different. Everybody has a different arrival time. Everybody's got a different point where they get it. Everybody's got a different point where their plan makes sense, where things just click. And what happens very often is you may be faster than someone, you may be slower than someone. And if you're slower, human nature has you start beating yourself up. Well, why am I not better at this yet? Why don't I have this trade down? Why can't I do what this person does? Well, they're in a different place. Maybe they studied harder. Maybe they have a very analytical brain. I can tell you, Em, my wife has been in the medical industry for the last 25 years. And the way her brain works compared to my artsy-fartsy draw-on-people brain is totally different. And when she starts trading, there's no doubt in my mind her results are going to kick the ever-loving crap out of mine because that's how her brain works. She's got hurdles that she doesn't have to overcome that I do, and it's just one of those things. So I like it. Be in awe. He's an amazing trader. But it just is what it is, right? We all get there at a different time. We all find our clarity at a different time. I'm in awe of most of you guys in this room, except this guy. This is the Malox trade. 3 divergences in the same price range on an area that hasn't broken. Ron says I can take it up to the reversal bar marker. So this takes a concept. And let's talk about it. And then, it's already 11:30. We'll just make it to the end of class. And Nana, this is cool because it's right there where you were curious, right? So the large chart read. Why do I have pink arrows today? I feel pretty today. Here we go. The large chart read is everything says down, but I'm at an area that could create a bounce, and it hasn't broken yet. And then over here, I can't go short per my rules into 3 divergence at a 50-50 look But alas, there is a pattern that I see. Often, not always. This look can get me back to my large chart reversal bar marker. This is exactly how this trade came to be. With a lot of study, a lot of pictures, and probably a lot of simulated losers, making sure that the recipe was right. But the whole idea on this one is, if I can't go short, maybe I can go long. Oh, you. And price bars are left of the small triggers, which are up. That's another thing. I hate this trade. But I do love this trade. I love it because it's nothing more than a chart read lesson that's been expanded upon. And that's my goal for all of you. And it still hasn't broken. And it's still printing divergences. And check this out. Why are 50-50s so important to recognize? Because inside of these two bars at that 1-to-1 is all of this. This is all. How long has that consolidation been going? So all of these bars is what appears to be sideways motion on a smaller, faster chart, on a refinement chart. All right, let's make it big and let's answer questions. Don't ever be sorry for questions, please. Don't ever be sorry for questions. Questions are how we get to where we want to be, Miss M. All right, so check it out. I'm going to use the arrow and I'll make it a little thinner. Here's my first divergence and I'm going to extend it all the way to the right. Did the small and large break below it ever? Never. It's still in play. Which means this one's in play, which means that one is 3. Do you see how the small triggers didn't break him? And you'll get to the point to where you can see this in the moment. And they didn't break, and let's see what it did. And it pushed down, and they still didn't break that third divergence. You were looking at the higher divergence lines. So this one broke, absolutely. This one broke, absolutely. These are where the problem started. And look at the relationship. Let me show you guys what's happening here. So the box shows the approach to the 1-to-1s. And this is what happens a lot when you start getting at areas. I'm going to get rid of this right here. So right here, the buyers tested a little bit. Nothing had broken, and you can see that there was a little bit of a fight. And the buyers are like, oh, let's see what's going on. And then right here, they're like, let's gauge the reaction as we get closer. And right here, they're like, no, let's see if they're serious and if they want to push. And when they reached the area, the buyer said, all right, let's see how hell-bent on going down they are. And over here, they tested it again. And you'll see this as you get close to areas. You'll see this as you start coming up on fibs. You'll begin to see these divergences print. And all these are is the opposing force testing the waters to see what they can get away with. Does that make sense? So let's see if it happened. 21, 21, test the waters, right? We come down, we almost hit it. The buyers push right before it. They pushed again to see if they're going to get away with it. And then when they hit, the buyers push really hard. That was the buyer's number. And when they got back to that resistance, the seller said, we're not done. And that's where they pushed down. And you see this a lot. And as we come up to those yellow 1-to-1s. Look at the testing of the waters. Isn't that cool? You're not in charge. Someone else is. Guys, give me 2 minutes. I need to let my dog out real quick. I'll be right back.